Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is August 17th, Wednesday, of course, and we are joined by not only our panel, Becky Alley, John Kolb, top 1%, I should say, not 100%, top 1% of all originations in the nation, but we have special guest, Jeff Garner from eXp Realty, part of the Michelle Saber team in Trenton, Michigan, and Lisa Lawson just joined us. But good morning, everybody. Good morning, Jeff.
Good morning. Good morning.
How are you today, buddy?
Doing well, thank you. How you doing?
Good. Listen, it's been a special summer. It's been a special time in our industry, Jeff. Obviously, 2020, 21, maybe the beginning part of 22 was fantasy land for all realtors, all sellers. But the market has changed a lot just in the last 90 days. I just saw an article, Jeff, from this past Monday, August 15th, that states housing inventory is up over 30% over the same time last year. Now, I'm telling you, in our area, I don't see it. But are you seeing this in your market? It seems that it's a little unusual. Maybe inventories are up a little, but certainly not 30% in our area. Jeff, your thoughts are what?
Correct. So we're definitely seeing a few more houses to the market, but 30%, no way. Buyers have been a little taken back by the uptick in the interest rates, but 30%, no. Are we seeing more? We have more opportunities out there? Yeah. Because I think the buyers are slowing down, so houses are staying on the market a little longer.
But there's still, Jeff, probably still more buyers, more willing buyers out there than really nice houses coming on the market, correct?
Yeah, for sure. We're still only at about a 1.51 supply when a normal rate is 30 to 90 days. So we're still at low inventory rates. So definitely have more buyers right now.
Yeah, so everybody out there, everybody listening that's a consumer, that you're looking for a house, yeah, more houses are coming on the market, but just not the great numbers that you want to see. It's just not happening. And going to our panel, good morning, Becky Alley. How are you this morning?
Hey, everybody. I'm sticking with my gold glitter in the background because I like it.
We like it. Well, Roberto changed my background to black, so I had to wear a black shirt to match. Okay.
Oh, no, it looks good. You got the vest popping. I'm here for it.
It's all
I thought we had John Travolta on the show.
There you go. I appreciate that. And yeah, that's good, John. Here we go. Anyways, getting back to business and Becky Alley. Becky, you're on the street every day, as is John, Lisa, myself. We're all out there. And just the vibe right now, Becky, still a lot of buyers out there, still a lot of purchase agreements out there, right?
Yeah, for sure. I mean, when you hear the word 30%, okay, that's like 3 extra houses to the 0 that were there maybe like 6 months ago. I mean, you can make it sound really cool, but the reality is that the market has shifted, meaning it's a little bit, buyers are seeing, where they have better opportunities because there's less competition out there. But the reality is it's very much still a seller's market, and it's going to continue to be a seller's market for some time, but we are still getting, offers accepted. The good thing about it, though, is the fact that with the buyers that have been taken back by the rates and readjusting what they can truly afford or not, has allowed the serious buyers to get their offers accepted sometimes on the first shot, versus 6 months ago, they were literally writing 10 offers. I actually just had a closing yesterday at the Sayward office with one of their agents, Brian, and our buyer actually was a year and a half looking, and it took this little bit of a shift for them to actually land one, and we got it done in 3 weeks, which was great. But she was like, if there was a house for sale, we looked at it, and the quality just wasn't there for their liking.
That's so good. I got to tell you something. This is the Hardcore Mortgage Real Estate and Business Podcast, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage. Equal housing lender 2289 is our NMLS number. That's for our compliance and legal department. Lisa Lawson, you're writing a lot of purchase agreements. Your realtor partners are certainly busy. Yeah. We had Jacques Gagnon on our show, the Hardcore Mortgage Real Estate Business Show, this past Saturday. Heard every Saturday morning from 9 to 10. Jacques shared some interesting information. What do you and Jacques have going on?
Well, we actually have a lot going on. He's got a lot of listings coming up, and we were talking about, I think there was a hesitation there for a minute. There was that wait and see attitude, right? People weren't really listing houses. People weren't really, doing so much, but that's kind of shifted. I think, everyone's ready. The market stabilized a little bit. Rates have kind of stabilized. And I think everyone's anxious to get going and get moving and, getting on with their life, just like post-pandemic in general. And so things are starting to move. I've gotten quite a few purchase agreements in the past couple of weeks, actually almost record numbers for me. So purchase business definitely is not dead. And I think people are taking advantage of the stabilization of this market a little bit, and the fact that they have better opportunities to purchase now than they did before, because yes, it's still a competitive market, but like we've all just said, maybe instead of having to make 10 or 12 offers, their offers are being accepted on the second or third try, and it's definitely more realistic, especially for a first-time home buyer.
Yeah, appreciate that thought. And we are seeing a lot of purchase activity over year. Our purchase activity is up about 13% from this time last year. Purchases are still going strong. And John Cole, let's talk about going forward. What are your thoughts going forward? Are you going to see this continue? We know that there's a stabilization in the market. There's a stabilization, and we'll get into interest rates because everybody wants to talk about interest rates. But John, are you seeing a stabilization in your areas that you cover and with your realtor partners? Or are home prices still increasing, John?
I think we've tailed off the over asking offers, right? Now you may be, or appraisal guarantees with $30,000-$40,000 over asking. Now you may see a little bit of a bidding war at listing price, a little bit above listing price, but so I guess, yes, it's stabilizing off the craziness, but I think it's still on the high end of what's going on out there. You're not getting offers accepted under list price more times than not.
Under list price. We are joined this morning by Jeff Garner from eXp Realty, part of the Michelle Sayward team in Trenton. Jeff, do you concur with that? What are you seeing downriver in your area? Are you still seeing, has the market stabilized down there, prices? Are you seeing homes right now being sold for at list or above, or are they coming off the list price?
So a little of both. We have our weekly meetings on Tuesday, and actually a few agents in the office have got offers accepted under asking price. I've recently had 2 really hot listings go up, and it was right after the shift or the bigger change in the market, and about roughly a month and a half ago, and I got 2 FHA offers at asking price. So it was a shock. But I just listed a house this past week and showed it through the weekend. We had 7 offers and got $30,000 over ask price and $10,000 appraisal guarantee. So you're still getting them. Depends on how you price it. Our objective is to price it a little below market to get those multiple offers and get people competing.
Yeah, Jeff, we often talk about sellers' expectations and in our world, borrowers' expectations. Are your sellers prepared to hear that it might not go for asking price and it might be on the market a week, 2 or 3? Because, everybody was spoiled, Jeff, right? Everybody was spoiled. You're getting 15 offers all over asking price. What are the sellers' expectations now in your world?
So, and that comes up to me as the realtor, right? Not setting the expectations high. So to under promise and over deliver. You never want to over promise and under deliver. So you set their expectations that we want to price this house to sell, not to sit on the market. And obviously you want to price it a little under what others are going for in the area. So you'll still get those multiple offers and over asking.
Yeah. Hey, Becky Alley, I got a crazy statistic for you. This was crazy. Saw this today as well. This was crazy. Home builders across the country are experiencing an unusual rate of cancellations on their new construction contracts. This is due to the economy. Allegedly, it's due to interest rates going up, and that's certainly a fact. It's due to, a lot of people coming out of the pandemic and moving to warmer areas. If you could work remote, you can work remote from anywhere. So people were moving to the Southwest. They were moving to California. They're moving to Florida. They were moving to warmer climates. But you want to know what? there's an article that says this year in July of 2022, Becky Alley, in Texas, a 27% cancellation rate. That's almost, 1 in 3 versus 11% in July of 2021. In the Southwest, Arizona, where John likes to go, New Mexico, where John should move to, a 25% cancellation rate versus a 9% from the year before. Northern California panel and Jeff, Northern California, everybody wants to live in California, right? Well, 23% of the new construction contracts in Northern California last month canceled versus 8% the year before. Here in the Midwest, we're kind of, middle of the road. We're very vanilla, stable. 16% of all contracts in July canceled versus 13 the year before. Not a huge increase. But get this, Florida. Everybody was moving to Florida last year and the year before. 5% of the contracts were canceled last year, Becky Ellie. 13% this year. Now, the national average is 18% this year versus 8%. We're well under that. So, Becky, it looks like typically the hot markets are slowing down quite a bit as the pandemic gets a little bit further and further away from the height of it. The flight to warmer climates where people could work from. What's going on, Becky? I mean, come on, talk to me.
Okay, so that's a lot of numbers to take in, right? That was a lot of data for me to analyze there. But I will say this, that I feel like homeowners, they're not wanting to wait the year and a half for these new constructions. There's a really extended time. And then the ones that are not taking a year and a half, they're slapping them together. And I feel like, there's a lot of, pushback on some of the quality of the work of these new constructions. So if someone can buy existing and know they have good bones and it's been settled, I do think that they're pivoting that way. And you can see that the new construction, they're getting a little bit tighter on their contracts. They're getting a little bit tighter on what they're requiring these buyers to put down as that earnest money deposit on their end to ensure that they're not seeing these cancellations. I just actually am about to close one the end of this month. And it started in November of 2021. It was supposed to be done in, I believe, January, and they're just now going to get it fixed August 29th. It's going to be all completed. Now, with this particular buyer, we were able to maintain a 3.625 rate because we have that capability. We did an extended rate lock to secure her for all that time. But I mean, you're talking the builder's not communicating properly. There's a lot of pushback. And I just feel like buyers and consumers are not wanting to deal with that. Plus, they can't really lock in a price. They're hitting a moving target. And when you're buying new construction, not only are you hitting this high price point, but then you also have landscaping on top of that once you're done. If you're talking about irrigation, your sod, all these extra costs go with new construction. And I just feel like people are becoming a little bit turned off in hopes that more inventory is hitting the market and they're taking advantage of it.
Yeah, that's a great analysis. And, the home builders want to blame it. Everybody wants
to blame it on the rain. Blame it on the rain, Milli Vanilli.
Yeah, blame it on the rain. Wow. Okay. Anyways, they want to blame it on everything other than what, in my opinion, is really going on. Prices skyrocketing and just taking too long, whether it's their fault or not. We're not blaming anybody here. It's just a fact. Things are taking too long to get done. Look, we're going to go into it. Maybe not. I don't want to. How long does it take for you to get your house remodeled? Forget about building a new house. Even if you have an existing house, it takes a long time. Lisa Lawson, we don't experience the volatility here in Michigan and the Midwest like the nation does. It's kind of like, we're the last ones to really feel it because we're in the middle of the country, right? The East Coast we get squeezed by the East Coast and the West Coast, then it comes all together in the Midwest. I'm not really feeling it. My partners are telling me that here in the Midwest, my builders are saying, they're not really seeing a lot of cancellations. What they are seeing is just a lack of the extended traffic that they were seeing at the beginning of the year and through 20 and 21. But they're still pretty busy here in Michigan is what I'm finding out. Yeah.
The builders that I've connected with, I wouldn't say had so much cancellations. There have been some other hiccups, like there was people who've been pre-approved at a possibly lower rate when this build started happening, are no longer pre-approved at a rate in the, low 5.56s because they were only approved at 3.99. So they've lost approvals. So they're, had a home that was almost ready that then became a spec home because the people couldn't close. So I've had more of that type of scenario, just, as time goes on and the factors in general have changed. These builders who are building homes, the people who are intending to buy them can no longer. So I've had a few of those, but I haven't per se had cancellations, or I haven't heard of a lot of people getting cancellations yet. But, like you said, doesn't mean that, we're in the middle, doesn't mean that won't happen in the future. Especially if rates keep rising, it might not be so much cancellations as people who no longer qualify.
Yeah, John, let's talk about interest rates for a second. I know it's your favorite subject. I know you watch the market a lot. I know you comment to me that there's no reason why they should go up as fast as if they're going up. And I tend to agree with that. The Fed has said that they're going to come and probably raise rates another 2 times this year, probably in September, and then probably getting into October, November. But here's the thing, John. Got to throw the rate talk in there, because rates are ranging right now anywhere from 5.25 to 5.75, depending on credit score. We know that's a big driving factor, and LTV. But really enough on rates, because 5.25 to 5.75 historically, that's still really good. We know rates aren't going to come down. They're not going to come down. They could go up substantially. What's substantially? Another 50 to 100 basis points. But still, historically, right now, interest rates are still real strong.
I mean, yeah, interest rates are great. I mean, if you're talking about historically, I was just with my father and my uncle and over the weekend, and they were both talking about how, when they first bought homes, 16, 18%. So, we're very spoiled in the last, I want to say we're very spoiled in the last 25 years, right? Ever since I got in the industry, the rates have ranged anywhere from 2.5 all the way up to 9.25. So we're very spoiled when it comes to that. But I also think that the government and the Fed are not going to let rates get that high again, ever, just because it just takes so many people out of the game when it comes to home ownership. So, but, in terms of what the Fed's planning on doing, like Harry said, 2 times this year, and I think they're planning on halting after 2022 without any more raises in 2023. Which I think will stabilize our market and, cause our rates to come back down a little bit, especially when this inflation curbs and we get back to a little bit of normalcy.
Yeah, Becky, your grandma, bringing your grandma into this. Your grandma thinks
grandma, she's a rock star.
She thinks these rates are still free. I mean, she thinks she can't even believe that they're this low, right?
It's all about perspective, and yes, because you're talking about, my grandma's going to be 87 in December. I think they're the greatest generation that's ever walked this earth, compared, with what they've seen in their lifetimes, from world wars to the Depression to the recession to what's happening right now, technology, all the things, right? So when you get her fired, she gets real fired up about rates and she starts laughing. Her biggest thing is she wants the banks to push it on her money. Actually, she was like, let the rates go up as long as my money can collect that interest. But obviously it doesn't equate the same. But yes, we have been exceptionally spoiled with the affordability that's been out there in the last couple of years. Buyers have been able to buy homes that they wouldn't have been able to afford any other time in the history of ever. So people did take advantage of that. But right now, the rates are a little bit more stable. They're definitely not the highest they've ever been in my career, for certain. And they haven't been the highest in the nation's history. So people can still buy homes and they can afford homes. And it's never the payment that, when I'm having conversations, and I know Jeff the same way. Jeff is amazing at vetting his buyers, setting proper expectations. Jeff closes a lot of business every year because he is amazing at what he does, and he's very transparent, and the communication is always stellar. And our biggest communication and issue with our buyers is not the payment. It's where the funds are coming from. It's not what they can afford monthly. It's where this money that they need for closing, closing costs, their prepaids, all that stuff, plus what they're going to live on afterwards. That is the biggest consumer issue than I feel payment is. And if you have to drop your affordability from 200,000 to 180,000, okay. Because like Jeff said, if a home is priced right, you're not going to have to come in, this $20,000, $30,000 over asking. But at the same time, no one's going to compete with someone that really wants a house that bad.
Yeah. Along with Becky Alley, John Cole, and Lisa Lawson, we have special guest Jeff Garner from eXp Realty Downriver, part of Michelle Saber's team in Trenton. Jeff's been around the block a few times. Jeff, rates in the 5s are still pretty low. We love rates in the 5s because, right now the trend seems to be moving up. If they were to stabilize and stay in the 5s, I think that you would see people really coming off the fence again. And this economy talk, listen, I still think I'm outraged, Jeff, that people are happy that gas is under $4 a gallon. It shouldn't even be close to $4 a gallon. Gas should be $1.95 at the highest right now. We as Americans, rant time, Harry, we've been getting gouged and now we're happy. I don't understand it, Jeff. You and I got a few gray hairs on our head. I'm not happy about gas at $4, $3.99 a gallon, but I don't want to drag you into that conversation. I want to drag you into the conversation right now as we talked about expectations. When Becky, Lisa, John, and I sit down with our clients, we let them know that interest rates are still very, very low. When you talk to buyers about home prices and interest rates, what is your statement to them?
So when you have buyers right now coming into the market that are saying, I'm going to wait until the market crashes, till housing prices fall or interest rates go down, you just got to question, where are you getting this information from? Because the housing market is not going to crash anytime soon. It's going to continue to go up. It's just not going up at the rate that we've seen it the last couple of years. Interest rates are between 5 and 9 are normal, but people got spoiled with what we've had the last couple of years in the high 2s and 3s. I refinanced a couple of years ago for 2.675. So people don't wait, because they are going to go up this year. These are still fantastic rates. So now is a great time to buy. The ones that want to wait, you're just going to pay, your interest rates are going to go up. Your buying power is going down. So
yeah, have you heard it there from Jeff Garner, eXp Realty? He says buy now. We say buy now too, because you want to know what? That house might not be in the market in another 30 days. You might be missing out on an opportunity. Excuse me. Nice cough, Harry. I want to talk about just 2 minutes, and then we're going to wrap it up. I'm going to go to Lisa Lawson, then Becky, then back to John. Lisa Lawson, we're throwing an event, we're taking the Hardcore Mortgage Real Estate Business Show on the road, September 15th, 2022. It's going to be at Fifth Avenue in downtown Royal Oak. Lisa, what are we going to do there? Tell everybody what we hope to get across. What message do we hope to get across?
I'd like to say that we like to have a good party, but there's more to it than that. We are going to have a good party, but we're here to spread knowledge, and so everyone else can connect and share their own knowledge in regards to the market and mortgage and different products that are available. Because if you didn't know something was available, like I just shared with a teammate that there's a down payment assistance program in Port Huron for 10 grand. He had no idea. He's now saving a deal. The more we share, it just makes us better. Knowledge is power. So just kind of a big meet and greet and a big party, and it's going to be phenomenal. You're going to want to be there.
Excellent. Becky Alley, what are we hoping to achieve at the big Hardcore Mortgage Real Estate Business Show Road Show?
Well, I mean, this glitter backdrop might be there. I don't know, but either way, it's going to be a good time, and we're going to have some of the top producing agents. Like Jeff's going to be there with us. We're going to be looking to, kind of hold a little bit of a open line podcast for people that are part of our that's been a part of the Hardcore Mortgage Show, both on the radio and the podcast, to kind of pick their brains and let the other agents in the industry kind of see what they're experiencing. What are they learning? What have they been doing? What are their successes have been like in this market? And then we're just going to have a great time. It's going to be cocktails, walking around, hors d'oeuvres. But the biggest thing is just that knowledge is power, and that it's collaboration over competition. And when you get some of the top people in the industry in the room, amazing things happen. We're able to produce and close transactions very, very quickly. We're a national company, but people don't know what you don't know. And sometimes you just got to remind people what's going on. And the Hardcore Mortgage Show is always freaking slinging guns at you with the truth, man.
Yeah, we come here with the hardcore truth, because John Kolb, and John will tell you, he doesn't mince words. He doesn't pussyfoot around. He's direct. John Kolb, what are you hoping to bring to the Hardcore Mortgage Real Estate and Business Road Show on September 15th?
Well, first, the reason we're throwing this is because Harry hasn't seen a microphone in such a long time. He has to get one in front of him, plus a stage. So he's so excited about that.
I never met a microphone or a stage I didn't like, John. You know that.
That's true. That's true. My goal is to get everybody in the same room just so that they, have awareness on, how we do things, the camaraderie that we have as a company, making sure that they understand how well we work together and how well we work with every other agent out there, and to just have a good time, like Lisa said, and to just share how we want to continue to grow and do more with everybody.
Yeah, I think it's time to be out there. I think it's time to be in front of everybody. Relationships rule the day. The relationships that we have around and in our industry are certainly very strong. Over 30 years of relationship building. Yeah, it's nice to get in front of people. Nice to see people. We want to be there. We want to let people know that this is a different kind of market. This is not, this is not the market of 90 days ago even. Okay, so it's a little bit more intense. You really have to line up with a team and people that know what they're doing and set those expectations, real expectations. No more of this, hey, let's just throw your house on the market, Jeff, and see what we can get. So, in conclusion for today, first of all, I want to thank Chef Garner, eXp Realty, Michelle Saber team in Trenton for coming on our program. Chef, thank you very much. I want to thank the talented team that we have here. John Cole, Becky Elliott, Lisa Lawson. These are some of the best people in the industry. I can say that with conviction because I'm lucky enough and honored to work with them every single day. For the Hardcore Mortgage Real Estate Business podcast today, August 17th, 2022, produced and directed. Thank you, Roberto Beauchene. He's in the booth. Everybody, you got to line up with the right people. We're going to be bringing more to you. We're also going to we'll see you on Saturday morning, 9 to 10. Harvey Fried will be back. Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. Today is Wednesday, August 17th, and thank you guys for being on the podcast. We'll see you soon.